There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Keep in mind, it's forexfactory.com. Always click on the next week here so that you can have the correct dates. Don't make that mistake. I've actually seen traders looking at the wrong news, making the wrong trades. So don't let that be you, but you could filter out everything, see the red events only. So reason I'm bringing up a specific regional Fed governor that the St. Louis, the Federal Reserve Bank, St. Louis, there's essentially 12 regional presidents. In this case, it's James Bullard, really smart guy. He really has been much more vocal than a lot of the other central bankers. And, obviously he's a Federal Open Market Committee voting member. You could see the dates, and this really isn't about a deep dive into Bullard himself, but anytime his comments come out, I always pay a little extra attention to it. So he's speaking on Monday the 14th. Okay. The marketplace typically gets from all the wires a released set of notes, typically vary. But, if you take a look at last week's news, let me just drop back to Friday and Thursday's news, you can see CPI is still so not as hot as the previous, but that isn't as good of a comparison as to the actual versus the forecast. And that coupled with a number of things, I think is why we saw a pretty decent sell-off on Friday in relation to that. Many, at least in terms of the equity markets, I don't see it being anything other than that. So, but looking forward into the next week, just keep in mind that I probably wouldn't be having around with any kind of equity trades. And actually, while I'm getting synced here, I want to make sure settings are synced to 1 o'clock. All right, there we go. Because now I'm actually on Eastern time, so I try to do these calls. And, I don't know how this is going to affect the whole schedule, but I think I may try and drop back this call to 9 a.m. Eastern time on Saturday. So if anybody's got any dramatic objections to that, going on with family and so forth, having a middle of Saturday call is going to pose an issue coming into the spring for me. So I know the folks in Europe may welcome this. Essentially, it's 9 a.m., putting it somewhere 1 o'clock for some of the European countries, if I'm correct. But, you can always see the recordings live. So just hit me up if you think that's going to be any sort of dramatic issue for some of the European or overseas teams. But I think I want to change that back to 9 a.m. That'll allow me to get it out of the way. It'll be disseminated earlier than it was before. Get my notes up now that we have a much larger growing group in Telegram for our Market Watch channel, which I am posting in all of the different groups to do that. Trying to put the full court press, if you will, into getting everybody on board and following. So shout out to your teams for me on that, please. Going into Tuesday, producer price index. You can see the previous versus the forecast much higher. No surprise, inflation is here. More likely, the Federal Reserve will make some sort of move. I don't think the market or the currency market, I should say, I don't think the bond, currency, or equity markets are pricing in any kind of dramatic change. But I'll tell you, there's just something sweeping through the winds in my brain that tells me that the Fed's sort of just pumping the marketplace for an emergency rate hike, not cut. Can't believe we've said that. It's been a long time. Take a look at some of the comments here. Sound is breaking up, huh? No, I cannot see the chat related to this. So from the live broadcast, I would say just post it to Mariska. She can communicate with me directly. I don't know how sound could be possibly breaking up. I have like a super new Wi-Fi 6 system in this house and my office. And both the laptop and the headset are brand new as far as microphones. So just Telegram and a DM if there's some issues. But double check.
All right, do me a favor. Whoever can hit me up on Telegram, I switched over to a different headset. Let me know. This is the noise canceling one. I just dug it out from all of our moving boxes. Can you guys hear me now? Because I'm not going to go ahead and record this unless anybody can hear me. I'll just restart the whole thing, which I may wind up doing anyway. All right, so sound is good now. All right, so let me just do this start from the beginning. I'll just have the guys put this up on Vimeo and just cut out everything I said in the beginning as we start again. Improvisation, right? So today is the 12th Saturday. My name is Steve Vetterl. I am the firm's CMA. My job, when I'm not using the microphone incorrectly, is to be your risk manager. Let's take a look at next week's news. This is the 13th through the 19th we're looking at on the screen right here. Do note that FOMC member Bullard is speaking. This guy's a smart cookie. He has been quite vocal on inflation and the fact that, sort of like, if you will, hint, priming the marketplace, that he is wanting everybody to see a 50-point increase. That's something I haven't said in almost 13 years, which is damn near half my career. So it's crazy to be able to say that, but they've got to curb inflation. It's just absolutely going to just kill business to us. Do note that if in fact that did happen, more than likely the Fed is priming with different hints this could take place. But I can promise you, when the news of this hits, I would not be trading anything around that period of time. Probably the whole 2 days surrounding some sort of emergency hike. Why? Because more than likely the central banks overseas are going to follow suit. And it's just going to be a mess. And it wouldn't be a problem if somebody said to me, "Hey, Steve, I'm not trading the whole week." If in fact that did happen, I wouldn't do it. Why? The cross currents and the winds. Hell, even the best predictors and traders out there, I think, would just be sitting on their hands till everything we get some sort of direction. I don't care if it's equities, currencies, commodities, different areas of the bond or credit markets. I mean, they're all going to get roiled. Who knows? You could see complete opposite movements of some of these crazy directions. I remember when they did this the last time. The futures markets was bananas for about 2 days straight. So we just essentially stopped trading. So I think it's a wise move because trying to catch falling knives can be quite a deadly deal. Any case, now, as I always say, I could be wrong and that could not happen, right? So, but just taking a look at the futures charts, this is just finviz.com. Been showing this more and more because I like to show this to a lot of clients. They like it. You don't really have to take a lot from it. You just have to see what's going on as far as the markets. I want to see continuing themes and declines. I mean, look at the pretty decent move just in the last 2 days in the 2-year note. That would plus, as Mariska just noted in comments, I haven't been too plugged into the Putin news. Options of any kind of military action, any geopolitical uncertainty from that standpoint is a general uncertainty to most marketplaces. So it just brings volatility in and of itself. Now, it's not a new thing. That is a fairly normal forecast when you see a lot of that. I think the thing that's surprising me the most about this is, hell, even if we put these credit market charts on a weekly, which you seem to have to do more and more of these days. Just looking at the top of this window block here, the 30-year all the way to the 2-year, it's been some pretty big movements. And as I've told a brand new client that had almost $900,000 in a bunch of really junky from her previous brokers doing a poor job of managing her account, there's absolutely no way that I would want to be in bond funds during this period of time. Because even if you're getting income off of the bonds, the value is still dropping. Okay. Not much sense to make out of the US dollar in its relation to the euro. It's just craziness, I'll tell you. Everything is, with the exception maybe of a couple of crosses, almost everything is down, obviously, over a 2-week period as we're looking at here. If I jump back to the daily chart. You can see just a really, and I can go into more detail, but just staying real, just basic and macro, just a huge rejection off of this 97.50. It dropped almost a full $2. And obviously this was the previous week, but the repercussions are that with such a good rejection, typically that tells you that anything that you're trading has to spend more time inside its balance area. With that type of rejection, tells you, one of two things: they can make a run for it again, but I think a lot of the currency markets are just trying to feel out what potential changes could be coming in the form of geopolitical military events and/or the increasing in interest rates, which just seems inevitable at this point. But it is one of the worst times to be doing this coming out of a pandemic, which has created a lot of this. And I know everybody in this call maybe hasn't had experience with this, but I mean, I can tell you just flat out in South Florida, there is stuff in all areas, especially in automotive. They're really just seeing some supply shortages. It's just some empty lots. It's crazy to see. It's almost like somebody stole all the cars and shipped them to another country as far as new stuff coming in. It's like the weirdest thing, right? It's a supply chain disruption. A lot of that's coming from pandemic related issues, and certainly the semiconductor market is uh, in the crosshairs of that, and that's affecting a lot of different industries. So um, let's keep that in mind through all of this. But if there is, because a lot of people ask me in the credit markets, why would prices be going down in anticipation of rates going up? And it really is very simple. If the current paper floating around is paying 1% and the new paper that's being issued is paying 1.5%, what paper do you want, right? You want the one that's paying the higher rate. So the previous market of almost anything in this arena, it doesn't just have to be bonds, it's going to go down. So you have a liquidity drain that typically will happen in different times when the biggest purchasers being central banks over the last 12 years of assets putting cash in. Remember, I gave a couple of weeks ago that analogy about, a whole bunch of children sitting in circles with apples in their lap, right? As of the last 12 years, there was very little apples for sale in the circle, right? Most of the children were hoarding their apples or cash, whatever you want to use as the example. And now they're beginning to test the waters by putting apples in the center and negotiating price with another child, right, or another group of that may collude together to purchase. This is kind of an opposite of quantitative easing. It's called quantitative tightening. So QT or QE, a completely inverse correlated market operations by central banks. Sounds all great, right? But and I I kind of started from this point because my daughter's going to be entering in high school a macroeconomics class, which for almost any student on this planet, I think is an absolute core class they should take. You don't have to memorize it and become an economist, but it will give you a very broad understanding of how commerce operates globally in relation to money supply. So I spend a lot of time talking about this. Um, and thank you to those that have reached out and said they appreciate it. But it helps a lot in understanding currency charts from both a short and long term perspective in relation to, right? It's not difficult to memorize chart patterns. What is difficult is to how to see those patterns and how they affect the price of currency. It's all about forecasting. Remember, I said the best traders on this planet have the ability to completely envision what's going to happen. Okay, the Fed raised 50 basis points, which sounds sort of a ludicrous scenario at this point. They may have done, 50 basis points in one area, and the overnight lending rate may stay at a quarter, right? Most people aren't used to the sort of breakdowns between the two types of rate changes that can happen, at least as far as the Fed here in the U.S. is concerned. But how that affects asset prices globally is a completely different story. So, and I've talked exhaustively about this on Saturday calls over the last year. So I would encourage you to go back and listen to some of that. I think hopefully I talk about it, that you're able to pull nuggets out of each of these discussions. And who knows, maybe I was just droning on for a period of time. So let's take a closer look at some stuff. I think that's pretty much everything I wanted to say as far as the Forex factory calendar. Let's take a look at the charts. So if you're looking at or trading anything related to S&P in either equity ETF or some sort of currency, MT4 product land, you always want to pay attention to what's going on with this chart and to an equal degree what's going on in European, the DAX, which is this index. They look both similar from a daily chart perspective. Okay. Point is they've made rallies, and those rallies have failed at key, moving average lines and has pushed back. So is it a dead cat bounce? Are we triangling, right? It's building some sort of flag pattern. I think that this is probably more due to geopolitical and, obviously potential military maneuvers and, the Bullard's comments a little early in the week, and nobody wants to be long into the weekend, right? Because who the hell knows what's going to happen. So that explains a chunk, which is now bringing us back to a support line that we broke out from technically on the 28th of January, which is about a half a month ago. So will this hold or not? I don't know. I think the problem with any of what I'm going to talk about today, other than just an education on how things work, could be completely wrong depending on what goes on in Ukraine, which is unfortunate. So with that being said, Q significantly weaker. It's the NASDAQ market. As you can see, it took almost a full 1% higher hit. This is a tough area to be trading right now. Yeah, let's take a look at, we already looked at the bond market, looked at DAX. Let's go down to the DXY, show you an enlarged chart. So with this, I talked about the rejection. I find it always interesting how well the gentleman's formulas that he gave me to put on the chart for what's called a Bollinger Band just measures the degree of volatile, how well the craziness of these movements just rarely break outside this band, right? So this was an absolute extreme out move. And had I been on my trading desk when this broke, instead of stuck on a multi-day storm in Texas trying to get to Florida, I probably would have shorted this. And there's multiple ways you can do that. You can, trade the pair euro US dollar. There's all kinds of ETFs out there you can use to short this as well if you want to trade individual equity land. But this would have been a really good trade because I would have let it play out from multi-day. Essentially we're back inside the balance now, which is fairly defined in the 96.60-ish area, bottom base, 94.85-ish. So euro US dollar, opposite side. Notice we didn't touch the Bollingers up here, but we did peek our head above this important 114.50-ish area, but we didn't close above it. And the same extreme downs, we're touching the Bollinger Bands on that opposite flash on the dollar up. Doji, just typically an indecision candle trade the next day, and now we rip right back up. This barbecued a lot of shorts, I could tell you that. That's why these volumes were exceptionally high. And what else do I want to see here? Let's go to the pound. Not really seeing anything going on with really our auctioning, both high and low. We finished right around this 35.40 area. Don't have much to say there. US CAD tight range still. Not really much there going on. Do note if you're trading the yen dollar, rejection at this high level area, which on the weekly certainly. Heck, I don't think we've seen this area in a while. Yeah, that's right. So we broke out from this 113 spot 90, or I should say 960 area. Now it's offering itself as support for dollar Swiss. Notice the real tightness here. These coilings can totally lead to just a big breakout because stops could be playing out and building above certain areas. Euro GBP. Man, just the tightest range. It's crazy. Euro yen, tight range, very definable. You can see Euro CAD. This is probably an example, obviously, of just taking a look at a lot of these on weekly charts because I'm really just looking to see the bigger term because I have a feeling many of these pairs are going to test some of their outlier areas, the extreme outs as I call it. Euro Aussie, tight range again. GBP CAD, see that tight range on the weekly? Let's drop back to a daily on this one. Still that tight range. I'm actually looking at this real time with you guys. That way you can see what I say just as an initial thought right off the bat. Let me take a look at the gold markets. Yeah, I guess this is to be expected. Why? In terms of at least the extent of the movement. Let me just go to the actual spot market here. This makes it a little easier to see. But on the weekly chart, you can see how we were moving obviously up, and then pandemic related moves higher were issues, but we've settled into a successively tighter range. I do think there's a lot of stops. I do think if the geo uncertainty from a military perspective plays out, there's a lot of shorts to barbecue up here. And we definitely could see a considerable move in gold higher, which has been a long time coming. Oil, no surprise. The last time we saw high. Notice we're on a weekly chart here. You have to go to monthly to look at the last time we were up here. This is nuts. 2014. Look at that. Now, I do get this question occasionally. Yes, they do run in tandem, and this isn't necessarily related to currencies, but just from an energy discussion perspective, the only thing that really matters is the correlation. Okay, so you don't necessarily need to pay attention to the gasoline. What they call this is called gasoline crack spread, RBOB. Just pay attention to what's going on and see how they're very, very similar charts. Now, obviously, we're looking at them from a daily perspective, but if we look at a weekly chart comparing these two and all the energy spaces right across the top here, I don't pay as much attention to Brent, but whatever. you can have both backwardation and contango between these two, which is just a more sophisticated correlation. of whether or not the forward versus futures contracts in these have a big spread. A lot of times you can read into that bulk dry ship index, and there's all kinds of crazy. But all I'm trying to say is, if you're wondering why the price of gasoline is high, there are obviously a multitude of factors for that. It certainly can be geo now, it can be political, it can be supply chain issues, all kinds of stuff. People getting back out of their houses and driving around, right? Demand, all of that. But they're running very much in tandem. And let's take a look at crypto. So this is the month back at the weekly, and then daily. Had some higher volumes, note down here. Ultimately, I think this is probably headed for either a continued consolidation or sideways trade. I call it a balancing. But I think we need to have some more tests, because a lot of this, big sell-offs are followed by rallies. But when the rallies are very small, and again, these are daily candles, and the volume is declining, that's not a large growing participation. The breadth of this market, at least in this particular coinage that's traded, is not growing significantly, right? And then you'll catch periods where a couple of buyers will come in, or a larger whale, as they call them in crypto land, or and then they'll come in and barbecue some of those trying to play the shorts, right? I always will wait for, especially in something like this, some sort of event to take place like this, or some extreme out move up. But it's putting very little love, if you will, on the way up, right? If the volumes have been complete opposite of that, and they were totally participating in that, possibly that could be signaling that some other time frame player, right? Typically means longer time frame than what I'm showing on the screen, is in there accumulating, right? I want to ride the coattails of that. That's that trend following, train leaving the station thing I'm always talking about. But if the participation starts to wane and the volume's going down, it's just a matter of time before complacency sets in. And then eventually we have some sort of greater event that takes us down to, actually here, let me just look at 5-year. Actually, I don't like that. Let's expand that out again. Seems to me this 200-day would be the place that I would have some interest. May not see it. I could be wrong. I think ultimately we got to test this area, spend some time balancing flat trading sideways at this area, and then some sort of decent pattern to build the breakout with participation. I'd be in. All right, that's it for the crypto. I don't pay as much attention to Ethereum. Sort of the trouble with this area is that you don't really have a lot of brothers or sisters, if you will, to go off of their chart patterns, right? If you're a lover of chip stocks and you want to be a buyer of Nvidia, you could pay attention to all 6 of their competitors, right? Maybe not brothers and sisters, but their competitors, to know what they're doing and see what pin action would be affected. You always have more risk when you have concentrations in a particular area. You don't have a lot of chart patterns to go off of to read sort of what's going on in crypto. A lot of people say, well, there's lots of other cryptos, and yeah, but the problem with that, what they call open frontier stuff, what I like to call the log cabin days, is those chart comparisons you're not comparing apples to apples, in my opinion. So I don't even look at them. That's pretty much everything. I think what I need to do is spend some time, which I think I'm going to do after this call, installing the chat, because I'm sort of flying blind, and I didn't want to have another program opened until I can get back in front of a new multi-screen system that I have putting together in the office. So then I'll be able to have all kinds of charts open on different screens and just jumping between the two. So I'll go ahead and install that. But if you guys need anything, hit me up on Telegram. Tell everybody to follow Market Watch. In addition to, I call this the minimum requirement, watching your software developers' weekly calls and or the recordings at the very least. Everybody have a great week. I will see you all on the other side on Tuesday. Hopefully by next Saturday, I will have an announcement as to the new time. May the trades be with you.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.